If you are anything like me, you're probably actually not going to be too happy if you lost $14,000 in a week trading Forex. But I'm going to tell you why I am happy. It's because I know what the long-term stats are. I've had weeks where I've lost 50 grand trading Forex, and I've had weeks where I've made 50 grand or more trading Forex. And in this video, I'm going to show you why it never really bothers me when I lose money and why it never really makes me too happy when I make money. A very stoic mindset, very calm, peaceful, calculated, collected, calm as a cucumber mindset is what is required if you want to get profitable and then stay profitable long term, trading any financial market, let alone Forex or stocks or crypto or futures. In this video, what I'm going to do is I'm going to teach you why you shouldn't really get too joyful on your win streaks and why you shouldn't really get too scornful on your losing streaks. Any type of good fortune or misfortune is all just randomized and all just up and down, and all that matters long-term in trading is making a little more than you lose. If you're new here to my channel, my name's Nick. I'm just some bald guy who trades and makes videos yelling on YouTube because I have nothing better to do here in my apartment, sitting here alone, trading, because I don't have many friends. So maybe you can be my friend here in this video and we can talk about trading a little bit. Let's go ahead and look at the charts. I'm actually going to show you my trading week here. At one point, the trades I was in was actually up over $10,000 at the peak watermark high. And then all these came back and resulted in like around a $2,000 profit. Came back and hit the break-even stop. So I'm going to show you all these trades. This right here is my free Telegram channel. In this free Telegram channel, I share all my trades and analysis in here. And it's all for free. And I've been running this Telegram channel for 7 years. So if you'd like to join this channel, please do yourself a favor. This is good for you. Click the link in the description, or I'll probably put it in the pinned comment. You can join this Telegram channel right now. And if you don't like it, within 10 seconds, you can just leave. It's no big deal. But I have it here to help you, and I've been running it for literally over half a decade. So that's there. We're going to talk about these trades that I took, and particularly I kind of want to hone in on two really significant trades that I took. So whenever we go here to these charts, I'm trading GBP USD and I'm trading USD JPY. And on these trades, I had bought USD JPY and I had sold GBP USD. So let's go ahead and let's just look at one of these first, okay? We're going to look at USD JPY. You can see up here with USD JPY, you can see that price was making higher highs and higher lows. And then when price is making higher highs and higher lows, I thought that price was going to rocket upwards and continue to make a new high. And so as price was doing this, I was looking at the chart. I was looking at the chart right here. I'm trying to like find a way to get this here. We're going to go to select bar. As price was going here and looking like it was going to break above the previous high, I went long on USD JPY. So I bought right here, and then I put my stop loss just under the recent low that was created. So my stop loss was right here under that little recent low. This little low is what I'm talking about. So what this means is that if price is in an uptrend, and if price is in fact going to make a higher high, and if it's going to be relatively easy, meaning it's not going to go sideways for like a day or two before that happens, then price is going to be unlikely to break past the previous low. I want you to focus on one thing right here. With how chaotic trading is, it's very important to keep things ultra simple, stupidly simple, ridiculously, painfully, brutally simple. Because I'll tell you what happens if you don't. If you don't keep things simple, you have millions of variables to account for. And millions of variables by which are premised on the fact that are completely random. They could mean one thing, they could mean another. You could have some good news that occurs in the market and it actually causes price to drop. You could have a moving average crossover and it's a perfect time to get a trend reversal, but then it just continues in the original trend. You could have Fibonacci pullback, the 61.8 golden zone, and then it keeps going down after you buy. There's all sorts of things, and nothing is really super predictive unless you get enough experience to start being able to use your discretion and intuition to make trading decisions based on the context, based on your discernment of the price action, and based entirely on your applied experience. So what does keeping simple look like in trading? Take, for example, this trade that I'm just showing you right now. Whenever price looks like it's in an uptrend, and you buy, and you put a stop loss just under the recent low, and then you just let the trade run, that is an example of keeping things simple. Vice versa, price looks to be in a downtrend in your subjective opinion with lower lows and lower highs on the 1 hour, the 4 hour, the daily, the 15-minute, the 5-minute, the 10-second chart. I don't recommend doing the 10-second chart, but whatever time frame you're looking at, a price looks like it's going in a downtrend because it's making lower lows and lower highs. Then it pulls back, looks like it's making a lower high, and then you enter a sell with a stop above the most recent lower high that you think is in the downtrend, meaning if it just breaks past that, you think, all right, the trend might be over here. I'm just going to scratch the trade at a loss. As long as you're making a little bit more when you're right versus what you're losing when you're wrong, even with the 50% win rate, let alone a win rate higher than that, you can still be technically profitable, provided that your winners are bigger than your losses and that you win at least half the time. Which, if you look at the stats in trading, half the time price is going to go up, half the time price is going to go down. If you don't believe me, I made a video, the very last video on my channel before this one, where I literally showed you could just use a random number generator and you can buy and sell with a 1-to-1 risk reward ratio, literally anywhere on the chart, with varying degrees of stop losses and take profits. And in the long run, given enough trades, you will break even net of fees and commissions. And that's a hell of a lot better than 99% of people who are losing money trading, or 95% or 90%, whatever the stats are, right? Most people lose money trading because trading is extremely risky, and most people just lose money. It's hard. It's challenging. Almost no one makes it. I'm just sharing with you some of these things. That way why almost no one makes it, so that you can make sure not to do that. So if we are keeping things simple, and if I bought right here and I put a stop loss just under the most recent low, this is premised on the idea that if this little uptrend thing is going to continue, then everything's going to work out nice and easy. And if it doesn't, if it goes and breaks that low, then I'll just get stopped out. It'll be a small loss. But if it does work out and runs into a huge profit, then it will make a nice little profit. So in this case, you'll see that price started to run up. When it got up here and made a nice new higher high, I ended up moving my stop loss up to break even. And then what happened is price started to come back. Then over the course of London session, came back and hit my break-even stop loss. I'm going to let this run so that way you can see exactly what happened. If I were to lose this trade, I would have lost about 1%. But at one point, this trade was up about 3 to 4%, depending on exactly when you look at it. It was this USD-JPY trade right here. Now again, the risk on this trade is just 1%, which 1% of the account at that time was about $750. So if I lose $750. And then this was up about $3,000. It was up almost 4% at one point, like 3.5%, 4%. It's very important for you to understand that controlling risk is really the only thing that matters at the top of the list. After that comes your experience to help you make decisions and user discretion and intuition. But if you're not using that, even if you are using that, you still have to control risk, right? You can't just buy or sell because at some point you're going to be wrong, even if you're using intuition and discretion. The only way you don't need to control risk is if you have a 100% win rate. You're going to win every single time, which is, I'll just go ahead and say it. I think it's impossible. So you have no choice but to control risk, essentially. You are gambling. You are placing a wager on an uncertain outcome. Even if you are 99% certain about the outcome, which I don't think is realistic. I don't think you can be. But even if that is the case, you still have to control risk, because what are you going to do the 1% of the time you're wrong? You don't want to lose all your trading capital. That's the importance of controlling risk. So price came back, stopped me out at break even, and that was what resulted for this USD-JPY trade. GBP-USD was just the inverse trade, right? I just sold. So what had happened on GBP-USD is that price had come up here, and I thought that price was in a downtrend. Now, why did I think it was in a downtrend? Well, just because I looked at the chart. I looked at the 4 hour, the 1 hour, the 15-minute. I even looked at the daily. And I just thought price was making lower lows and lower highs, right? Right here, we're just looking at it on the 15-minute chart. Doesn't matter what time frame you use. The time frame will just kind of dictate how long the trade ends up playing out. If you're trading on the 1 minute with your stop right past the previous 1 minute high or low, your trade is probably going to take less than an hour to play out. I think it makes it a little bit harder to trade time frames like the 1 minute because you have higher spreads. And usually if you're risking, say, a percentage risk per trade, you're going to have to use a higher position size. You may not even have the margin to do that if you're using a regulated broker like I am. I use Forex.com. I'm not affiliated with them, and I'm certainly not promoting them. But that's the broker I use, Forex.com, with MetaTrader 5 as the platform. I use the mobile MetaTrader 5 platform on my phone to enter the trades. You wouldn't even have the margin to enter on a 1 minute chart, let alone the spreads to be able to not get stopped out if you got a 5 pip stop loss, because sometimes these spreads can go from anywhere from 2 to 3 pips. So with that said, we're just looking at it here on the minute 15, but you can use whatever time frame you want. I think 1 hour, 4 hours is a good place to start. Things are a little bit slower, you get a little bit more time to think. Then you can start doing stuff like maybe going to the lower time frames or glancing at the higher time frames, etc. But I thought that price was going to go down from here. So what did I do? I entered a sell up here, and then I put a stop loss just above that little high right there, right? Because the idea is that if this trade's going to work out easy, it's going to go from right here, and it's not going to crack above that high. Because if it does, then that would be an invalidation of the trading idea because it's broken the recent high. And if it does break the recent high, price might be running up to make higher highs and start going crazy. And, we don't want to be a part of that. We just want to get out of the trade, move on to the next one, and make more on our winners than we lose on our losers. So I entered here, and you could see what happened is price, it started to go down. As it started to go down, I moved my stop to break even for this set of positions up here. And then I entered a second layer of positions right here whenever price started to go down. Now, what are the exact prices? You can go and look it up for yourself. The exact prices are right here in this terminal screenshot. This is my live trading terminal. This is my forex.com live trading terminal. I show all this in the Nick's Trades group. This is a Discord server where I just call all my personal trades live. I think this should be a link in the description with this. It has a group chat community, live trading, everything like that. But you could see all my exact entries and exits. So all of that is there. You can see that I entered a sell here, moved the stop to break even, added a second sell whenever I started to go in profit. And then at that point, once I went into more profit, I just moved the stop to break even for all the positions on the whole basket of trades. So I didn't post that in here. Yeah, it doesn't look like I posted in Telegram, but I posted in the Nick's Trades group. You can scroll up to the server history. You can see all my live trades from, like since I started this group. You can also see the 2024 trading history for the whole year of last year in 2024. All the trading history is there since the beginning of the year. Same thing with now, the beginning of the year this year for the past 5 months. All the trading history is here. And you can see right here that all these trades, right, they came back. So whenever I got into this trade right here, if GBP USD would have gone a little bit further down, USD JPY would have gone a little bit further up, I would have made like $20,000. Okay. Instead, that didn't happen, right? Moved the stop to break even. I controlled risk. Price went down really far, right? It was in a lot of profit. Came all the way back up. And instead of getting stopped at break even, I closed in a small profit down here, which was about $2,000. A little bit more than I risked, right? Each risk entry was about $750. So, for me, I was risking about $1,500, closed at about $2,000 profit. So for the total risk on the trade at any given time versus what I made, I made at least 1 unit of profit on this. In this case, it was about 2%, right? $2,000, just over 2%. So in this case, price ended up running up, and then it kind of went sideways for most of the session yesterday, and then it started going down. And this coming week, I'm going to just get short again on this because I still think price is going to go down. So I'm just going to get short again. And guess what? It's either going to be a small loss or it'll be a nice, huge profit. And that is the beauty of losing money in trading, because whenever you lose money trading something like Forex, for example, you don't have to worry because you know that your losses are really small. And take, for example, all of the trades I took this week, right? I took a bunch of trades this week, so many, right? Price would be going up, I'd be buying, have a tight stop. Price flips around, hits the stop loss, I get short, it goes sideways, hits the stop that way. So, I'll take back-to-back consecutive losses. However, this week, even though at one point I was down, I think initially on the week I was down like $10,000, all the trades I took that were losses, which was like a 10 trade losing streak, right? It's not sexy. There's no easy way to say it. It's a 10 trade losing streak with small percentage risk per trade, so it's not that big of a deal. Just these few trades that went into a lot of profit was up. This shows 9,400, right? At its max watermark, it was probably like 10,500, right? So just over $10,000 of profit. I could have closed all those right there and just broken even on the week, right? So I had a huge, I wouldn't even call it a huge losing streak, right? When you're having really tight stops and there's a lot of volatility in the markets and you're not spacing your stops really wide, yeah, you're going to have way more losers, but that's why you have to risk a smaller amount. You can't be risking 20% per trade with like a 5% stop loss unless you're just prepared to lose the account very quickly, because it's probably what's going to happen. So even with all the small losses, these two trading opportunities, right? The sells on GU and the buys on UJ These were able to accumulate very quickly. I mean, just over the course of like one trading session, right? From like the end of New York session up into Asian, over the course of about maybe like 8 to 12 hours, these accumulated like essentially all the losses from the past 3-4 days, and then even started to go in profit. Had these extended just a tiny bit more, the position sizes were so heavy and the risk was controlled so well that these could have resulted in like a 20, 25, even $30,000 profit if it would have really started to run. More realistically, probably a $20,000 profit. And had that happen, I would have made back all the losses, right? All the 10K of losses. And then on top of that, I would have made another $10,000 of profit. But instead, this week, I ended down $14,000. So I want to put this into perspective for you. When you know that you have an edge that will play out statistically long term, it is very, very, very excruciatingly important to remember that the stats do play out given enough trades. Your confidence level as to whether or not those stats are actually going to play out is going to be based on your persistence, your risk tolerance, but most importantly, your experience. You have to get enough experience. The accumulation of all of that experience, seeing the buys and sells, seeing price flip around back and forth, going through a week-long crazy win streak, and then going through a 2-week losing streak, and then going through a week of just break-evens, and then you have another week where you couldn't even find any trades. Then finally you get another win streak, which sends you back into profit. You have to get used to that roller coaster of trading because almost no one has a win streak every single week. It's completely normal for a losing streak to happen for 1, 2, 3, 4 weeks sometimes. And then you just have to sit there and just kind of shrug your shoulders and be like, it's part of trading. I'll just keep trading. As long as you're making more on your winners and you're losing on your losers, you can literally have back-to-back losing trades and back-to-back losing days and back-to-back losing weeks and be perfectly content that long-term the stats are going to play out. The biggest week I've ever had in my trading career was about a year ago. It was actually back in May of last year. And currently it's May of 2025. It was in May of 2024. It's about a year ago. I made $183,000 over the course of about 6 weeks. And I won almost every single trade. That $183,000 I made trading Forex, that represented most of the profits for last year. And the rest of the year was, honestly, it wasn't that great. It was a little bit of profit here, a little bit of loss there, break-even period, a little bit of profit, a little bit more profit, and then a losing streak again that set me back to break-even, and then some more profits. That 6-week win streak represented most of the profits for the entire freaking year. This is what the reality of trading is. When you see people posting things like I'm winning here, I'm winning there, there's just a bunch of wins, but you don't really see a lot of losses, and also someone's not calling every single one of their trades in and out, time-stamped in real time, live, you should be very suspicious of whether or not that person can actually trade. Because the people that actually can trade and actually trade live, you will see that it is not all butterflies and rainbows. You will see that they have losing streaks, and you will see that sometimes there are weeks where they're just losing, and they have a small win, losing. They have a big win, they break even on all the losses, then they lose, and then it ends a 4-week period down. That is completely normal in trading. Professional traders at hedge funds average 2 to 3 losing months per year. I myself average at least that, if not more, if not sometimes like 4 or 5 losing months per year. Of course, it's not catastrophic losses. It's all managed and stuff. And when I do have a win streak, I make it all back with more profit. And I end the year in profit and have for the past 7 years now, since 2018. As long as you make a little bit more money than you lose long term and you keep things incredibly simple and you control risk very well, which is literally just putting a stop loss wherever you think would be invalidation of your trading idea, then long term, small percentage of you watching this video will become profitable. Now that said, going into next week, I think there's a lot of really good trading opportunities. I'm really excited. We're getting a lot of movement, not only in Forex and stocks, but also in crypto. Bitcoin went right back above $100,000, sitting at $103,000. Solana's up back to above wherever it was before, which is like 170. Peak was 174. Same thing on Algorand. I have a couple of these cryptos in my crypto wallets. The crypto market's moving, the stock market's moving, and the Forex market is certainly moving, and I'm pretty excited for next week. If you want to follow my trades and analysis next week, make sure you join the Telegram channel. Just click the first link in the description below. And if you want to have a community where you can ask me questions and get coaching from me personally there in the group chat and see all my live trades with the exact entries and exits and everything like that, You can join the Mission FX Knicks Trades group. You can find a link somewhere, either in the Telegram channel, or I think it might be in the description of this video, and you can check that out. But first, just check out the free Telegram channel. Follow that for a few weeks. That way you can kind of get a feel and get acclimated to how I trade. And if you liked this video, great. That's awesome. I'm glad you liked the video. If you did like the video, I'll see you in the next video, my friend. Cheers.